So what we've seen is a rotation towards all of those out of favor sectors, all the value sectors, small cap, mid cap, dividend stocks, more conservative, not basically non-Mag 7 stocks. And the biggest question in my mind is this the trend for the year? Is this the roadmap? Should we be buying the mid caps, the small caps, the value stocks, the dividend stocks, getting out of some of the Nvidias, the Googles, the Metas, the stocks that really got us the big gains over the last few years?
Welcome to Thoughtful Money. I'm Thoughtful Money founder and your host, Adam Taggart, welcoming you here at the end of the week for another weekly market recap, this time featuring what sports-tastic, I guess we'll say, portfolio manager Michael Lebowitz. Mike, how you doing?
Doing great. Sports-tastic?
It just every time I try to pull you in, like for our conferences and stuff like that, you're always at some big sporting event. It's a passion of yours, clearly.
I guess. I guess. Not today, though. I saved the day for you, Adam.
Well, thank you. Well, let's be transparent about the day. So Mike and I are actually recording on Thursday. So whatever the markets do on Friday, we're not going to have be able to cover in today's discussion. And the reason why we're doing that, folks, as a reminder, is just because RIA, Lance and Mike's firm, is having their annual conference in Houston today, which I'll be attending. Very excited to be there. In fact, it'll be going on live while people are watching this video when it debuts. But we didn't want to leave you hanging, folks. We wanted you to, the folks that aren't there in person in Houston, we wanted you to still have something to recap the week. So that's why we're here recording now. All right, Michael. I guess first, do you recall the hotel where the conference is going on, just in case anyone's watching this in Houston and says, "Oh my gosh, I forgot it was today. I'm going to jump in my car and come on."
Absolutely. It's the Hotel Sonesta. Um, I think downtown. But if you go to our website, realinvestmentadvice.com, there's a huge link to it. If you look at our, recent articles, you'll see links. So, there's plenty of links. Go check it out. And I think there's still a few tickets available. So if you, well, I guess if you're seeing this, it's too late. But
Well, no, if you live in Houston, hop in your car. I'm sure if they come knocking, we'll let them in.
you come
So,
knocking, we'll let you in.
okay, sounds great. All right, well, look, maybe let's start there. So, for the folks that don't make the conference today, um, can you give just sort of a brief summary of the key points you plan to talk about there?
Absolutely. The uh, the theme is we're going to talk about bonds because everyone always wants to hear about bonds for hours on end
Hmm.
and on end. And I will give not only my projection of what I think for bonds, but I think what I've created is a nice way for people to say, here's what I think, thus this is where bonds should go. And it jibes with a lot of the stuff I've presented in the past, but I think it's really easy to use, kind of a DIY kit.
Is it kind of a choose your own adventure? Like
Choose your own
I might
adventure.
not share Michael's views on inflation or whatever, but if for folks with my views on inflation, then it looks like bonds should do X.
Exactly.
Yeah.
Exactly. So it's a nice wrinkle to some of the other work we've done in the past. Then we'll talk about everyone's other favorite topic, the dollar and debasement. Uh, and I'm also going to do a little bit on how money's created, because I think that's very important. I think a lot of people don't understand that. So it's my intention to bring some monopoly money and actually play out a little dollar creation for you,
Oh,
for the
awesome.
for the
Fun.
attendees. Which reminds me, I got to remember to bring the monopoly money. And then we'll end as, I think any investment proposition, not proposition, but a discussion evolves with the Fed and what's going on with the Fed and what we should expect with the Fed, given that they control liquidity. I think it's ever since 2008, they have become the one of the most important things to consider when thinking about which assets you want to buy or sell and where markets are going.
All right. Well, if you don't mind, I might talk about kind of just some of your key takeaways from each of those. Folks aren't going to get all the detail that you're going to be sharing in the conference itself, but maybe, one or two of the sort of seminal takeaways on each of those topics, bonds, dollar, and Fed. Um, First, though, why don't we just make sure we deliver on what folks are hoping for from here, which is let's look at what the markets are up to. Let's get your latest on the technicals and everything. Last week with Lance, he kind of reiterated, look, lots of potential concerns about markets, valuations still crazy, in many ways. But we're not going to worry. We, meaning RIA, we're not going to worry until and unless we see technical signs of some sort of breakdown in process. And as of last week, looks like pretty clear sailing as best we can see so far in our models. What's it like today?
Yeah, I think that generally holds true. Market traded a little weaker a day or two ago. I show you the graph, and you look at the graph, and there's really nothing going on. It went down to its 20-day moving average. I printed this. I took this graph this morning. The market's up. I want to say the S&P's up 50 today, 45, as we're doing this kind of midday. Uh, so we're just, for lack of a better word, just trotting along. Uh, Again, the
Definitely no
MACD.
signs of danger in this
No
chart at
signs of
all.
anything. No signs of anything. We're just in a very low volatility environment, which is, when you're in a low volatility environment, there's a lot of complacency. And it does feel like, to some degree, a complacent market. Obviously, valuations are very high, and that on its own shouldn't be complacent. But nonetheless, that's where we're at. Now, what I do think is interesting is, if you think about the last couple of years, the S&P going up, trending higher, has been largely a function of the Mag 7, or, more specifically, about 10 to 15 stocks have really driven the market higher. Plenty of stocks, hundreds, were flat, slight gains, or even losses over the last couple of years, despite significant gains in the S&P 500. And that's because seven stocks alone account for a third of the S&P 500. So as we come into this year, we have a little bit of the opposite story. It's interesting. We've seen kind of the S&P plodding along higher, but some of those big names have been underperforming decently. And in the yellow circle, I kind of highlight the last month or so, and I have that orange bar, the orange line, and that's the Russell, the small cap index. And what's interesting is you can see how the Russell has caught up. It's outperformed the S&P 500 over the last month and a half. So what we've seen is a rotation towards all of those out of favor sectors, all the value sectors, small cap, mid cap, dividend stocks, more conservative, not basically non-Mag 7 stocks. And that leads us to kind of where we're at today. And the biggest question in my mind is this the trend for the year? Is this the roadmap? Should we be buying the mid caps, the small caps, the value stocks, the dividend stocks, getting out of some of the Nvidias, the Googles, the Metas, the stocks that really got us the big gains over the last few years? Or is this just a rotation? And you get these little short-lived rotations from time to time from in favor to out of favor sectors, and they can last for a month, 2 months, and then it reverts back. And it might just be that, once again, 2026 is again the year of the Mag 7, with many other sectors underperforming. So Adam, what I printed out here, what I show here, not printed out, is we do in our SimpleVisor platform, we have what we call absolute and relative analysis. And what this does is it looks at different stock sectors, factors, or even stocks, and it gives you a relative score and an absolute score. Both scores are based on technical analysis. The relative score is based on the price ratio of that sector or factor to the S&P 500. So it's relative. Is it if
Mhm.
the ratio is going up, it means that the sector factor is outperforming the S&P and vice versa. And we run a bunch of technical analysis on that ratio. The absolute is just technical analysis on the price itself of, in this case, we have factors on my page, on the page. So, and what I really want you to focus in on is what I've circled. Those are the absolute scores. And the scores can range from +1 to -1. We've kind of sized them to that level. And right at the top is gold miners. Not surprising that they are extremely strong on their own, just the price trend, and versus the S&P 500. But our discussion today is really on those next 10 or so, mid
All right.
cap
Sorry
400.
to interrupt, but just because a lot of folks aren't going to be able to move beyond without getting this question answered. You said strong, which can be interpreted as positive, but you clearly use red as the indicator as this score approaches one. So
Mhm.
is that also meaning sort of like a, extremely richly valued? Is that another way to say
That
strong?
that's a great conversation. This is a debate we have a lot. It's really overbought. So the question is, bullish and overbought are kind of one and the same. The question is, when does it become too bullish? When does the price trend, has it far exceeded its fair value? So we use red because it's overbought, in our opinion. And the closer it gets to one, the brighter the red, the more overbought. And what we've typically seen is when you get a score above 0.80, it's very hard to sustain it. And it's likely that that score is going to fall. Doesn't mean the stock's going to fall out of bed, but it may just mean, best case scenario is just a period of consolidation where the stock goes nowhere and the technicals, it kind of catches up. The moving averages, for instance, can catch up to the price. But you can see here, you have a couple mid cap 400, the small caps have scores above 80, and there's a whole slew with, kind of 60 and 70. That's very overbought. And it's all the sectors that were out of favor last year. Even the equal weight S&P 500 is in there, the small cap, the mid cap growth and value for both of those, large cap value. Scroll all the way to the bottom in my blue rectangle, and what's the two most, they're not oversold because they are positive, but they're very close to fair value. Mega cap growth and basically S&P 500. Um, Now, if you want to look to the right, those are the relative scores. And you can see at the very bottom, mega cap growth is getting decently oversold versus the S&P 500. And some of those other factors that we discussed earlier, like small caps in particular, are getting very overbought versus the S&P 500. So I think this is telling you is that we are going to get a rotation probably back towards the kind of S&P 500 and the mega caps. The question is, will it be a 2 to 3 week rotation to kind of get everything from being so overbought, kind of a little bit back more to normal, and then resume on this trend where those out of favor sectors and factors are leading the way? Or do the mega caps just start rolling on for the year like they did the last few years? And it'll be interesting to see if what we're looking at here is the roadmap for the year ahead or just an anomaly that's, gonna fade in short time.
Mhm. Let
So,
me ask you this. I mean, without looking at any of this data, I could have said, hey, this year, Michael, we got three options. Um, capital is going to rotate out of growth into all these other things, right? Or it's going to be another year like the past couple of years where growth just, is the dominant theme again. Or it's going to be a sloshing between the two, right? Um, and right now, we have seen that some rotation into these smaller things. The question is how sustainable is it going to be, right? How are you going to be able to determine um, what are you going to be I guess, looking for to determine which of those three cases you're going to say, oh, okay, we now think this is the theme of the year, and we're going to start making portfolio changes as a result?
So first of all, we have on the margin made some changes. I think in December we made some changes. We added a little more value, right? We added Altria, we added Verizon. And I think we're generally going to shift in that direction, assuming that's what the markets are telling us. But we have plenty of tools, this being one of them, to show us how the markets are rotating, what's in favor, what's out of favor. What will be very interesting to me is this will correct. These scores will not stay this high. How will that happen? Will it just be a period of consolidation
Right.
where those factors go nowhere? Maybe the S&P does a little better than them, maybe a little worse, but it just kind of a boring market for a few weeks, or maybe the Mag 7 just do much better. So I want to see how this resolves itself, how much strength the Mag 7 can regain after being underperforming for the last month and a half, and take it as it comes. There have been clearly some dings in the AI narrative over the last month or two. The debt has become an issue that some of these companies are taking on, the circular nature of funding. So, the restraints of the power grid. So let's just see how the narrative progresses, how the performance keeps going on, the rotations, what's rotating, what the market's telling us. And, I think I'll have a much better answer for you come March. But I think this trend or counter trend, whatever it is just too, we're in the first inning. It's just too hard to really tell you how it's going to turn out.
Okay, let me ask you this. So let's say you're back on here in March, and let's say these numbers have all changed and moderated because of consolidation. Um, I mean, obviously you can reserve the right to make whatever call you're going to make in March, depending on all the other factors that are out there. But all the other things being equal, would that influence you to put more of your portfolio into, these more sort of non-growth areas?
I think if they consolidate in a healthy way and the Mag 7 doesn't just start running over everything, there's a case to be made that some of these sectors may have some reason to invest in, to shift the portfolio towards some of these sectors or factors. Uh, at that time. Now, here's what's important, Adam, and why this is so striking. We've seen this throughout the last couple of years where some of those factors, and I'm showing factors, but we have the same exact screen for sectors where they've been outperforming, both on a relative and absolute basis. But we have never really, over the last couple of years, seen scores this high. And that's what's a little more striking this time than the prior instances. Um, so that's why we're drawing it to your attention. I think it's worth paying a little more attention to. But yeah, I could see this is starting to feel a little different, and with valuations so high, it makes logical sense. The other thing we've been hearing is this whole reflation trade. The economy is going to boom once again. And corporate earning expectations are very high right now for the year. So, and a lot of that is coming from those other 450 stocks. They think that the Wall Street thinks that the earnings for the non-Mag 7, the non-top 20 stocks will be vastly improved over what's been virtually flat growth for a couple of years. So that narrative feeds into this as well. Um, Interestingly, when you do this analysis on the sector side, materials and transportation stocks are they're at the very top in red. And that brings up another issue. First of all, a lot of what I've said applies to them too. They've been out of favor. If the economy is really going to start doing better, you would expect those to do better. Materials are being boosted in part by Newmont, by Freeport, the McMoran, the copper company.
Hmm.
But if you look at the correlation between bank reserves and different sectors and factors, you find that materials and transportations have the highest correlation. So now you're asking, well, why do bank reserves matter? The bank reserves matter because the Fed started QE about a month ago. QE feeds bank reserves. So if QE is being done to the right size and in time, it will add to the Fed's balance sheet. It will add liquidity to the market. And those two sectors have the highest correlation. So that's another factor is that QE is out there. And if QE is really going to impact the markets because liquidity reserves will rise and with it liquidity, some of these sectors will also benefit from that.
Okay.
Factors will benefit from that, along with certain sectors and possibly crypto.
And Mike,
No,
is that similarly true if along with QE, there are additional rate cuts?
even more true, right?
Okay.
They're adding liquidity to the equation.
Yep.
The question is, yes, the Fed's doing QE, but there's a natural drain of reserves. As a bank makes loans, their reserves are declining. And that's what's been going on. Reserves have been declining. So the big question is the Fed adding enough? Is 40 billion a month enough to offset the decline? Secondly, even if it just offsets it and reserves kind of stay steady, that's not really adding to the market liquidity. It's just keeping a steady state. So, and they're adding 40 billion a month. So maybe it just takes a couple months and then that trend starts going higher. It accumulates. So again, that's something to consider when you're looking at what sectors, what factors, what stocks you should be buying, selling, transitioning into, fading, whatever it may be.
Okay. So Mike, I'm seeing here just from your PowerPoint menu there that you actually got like seven more slides or eight more slides. So let me let you go through those two and not keep you on this one.
Okay, so we've talked about silver before, and Lance gave me a great idea for an article. He basically said, "Isn't it funny how people in bubbles don't see other bubbles, or they see other bubbles, they don't see their own bubble?" Um, and I was kind of thinking of a cartoon. If I could draw cartoons, I would have just done that instead of writing an article. And the cartoon, and no offense, Adam, I know you like your silver. It's a person in a gold, silver, precious metals bubble pointing out all these other bubbles floating around. But I'm not creative, so I have to resort to words and graphs. And what I really thought about was, and I'm trying to help silver investors, and there's a narrative driving silver, driving gold. And what I want people to understand is, first of all, I think gold can go to 150, and I also think it can go to 30. I think it's
Sorry,
kind of
you
entered
mean silver.
silver, hopefully not gold. Uh, we got issues then. But what I want people in silver and gold to realize is that we've been ever since 2020 happened, we've been in this environment of what I've called rolling micro bubbles. These little bubbles that kind of come up, they capture the market's attention, they pop, but the ramifications, the implications are pretty small. This isn't the dot-com bubble, the financial crisis in 2008. Big, what I would call macro bubbles that just kill the economy, hurt many sectors that were not, it wasn't just financials in 2008. It just spread throughout the market. So what I did was I just kind of talk about these rolling bubbles that we've seen, and I created a lot of graphs, and the purpose was to really just make people aware that this has been what's going on, that these narratives pop up. There is some truth to the narratives. There's a lot of nonsense to the narratives. Ultimately, bubbles pop themselves. They can't keep going higher. The narratives fade, and we find out when you look back that the narratives were stupid. They didn't make sense. So I'm actually going to skip here. This is quote unquote the stages of a bubble. And basically, it's a market ramps up and then it comes down almost as quickly. And with it, sentiment, enthusiasm increase. And you get to the point where this is all new. It doesn't matter what happened to the past. This is different. This is different. And then it collapses on itself.
Yeah, the point is a bubble is a psychological phenomenon, not a fundamental phenomenon.
But not to say it can't be based in fundamental. So let's just think about silver. There's a good case to be made that demand for silver is increasing somewhat rapidly, and the supply can't increase. The supply just can't keep up nearly as quickly. That's a fundamental reason to own silver. And maybe what that means is that the fair value of silver, which in 20, I'm making up numbers here, in 2022, based on silver as an industrial metal was 25. Maybe now it's 35, and that's increasing $3 a year. Again, I'm making up numbers. I'm not an expert on industrial silver, but there is a fundamental reason to own silver. But from a psychological perspective, has a price just far exceeded that because of narratives about debasement and whatever else it is that's driving it. So look at this graph, and now I'm going to share a bunch of other graphs and kind of these micro bubbles. And what you're going to see is they all look very similar. So let's just start with alternative crypto coins and NFTs. Remember the NFTs were all the rage? Altcoins, other cryptocurrencies were all going to be the next Bitcoin. Cryptocurrency was going to rule the world. There was not going to be any more dollar. And look at these graphs. They're all the same. Look at Dogecoin, up 26,000% and then down 92%. Basically, great gains and then erased all within about 18 months. Uh, Board Ape, Board Ape Yacht Club, which I don't even know who thought that was going to be a thing, but it was tremendous. You remember the picture of the monkey with that spinning top thing on his head? That's
Oh,
what that one
there
is.
were a whole bunch of different monkeys you
Yeah,
could buy.
there
Yeah.
there were, and I don't know which exactly one is the Board Ape, the Yacht Club versus the other ones, but you get the picture.
I think
Fart
the Yacht
coin.
Club was creating these NFTs of the apes, and that's what people were buying into. But anyways, yeah.
Okay,
So I'll let you go
okay.
on. I will actually let you just proceed without giving any commentary along the way. I just will say the silver stackers who are watching this will react to this and say, yeah, but Mike, these things were just baseless fads, right? I mean, these things had no practical
Well,
value in the
uh,
world.
and, and I agree. I agree.
Yeah.
But let's go on here. Meme stocks. These are actually companies that exist that do have cash flows, do have revenues, do collect money from its clients. The feeling with meme stocks was that these companies were on the verge of verge of bankruptcy more or less. They were being heavily shorted by Wall Street. Let's go out there and buy these things because there is value there, and um, we'll make the shorts cover and we'll suspend belief in their valuations because we think there's a way to corner the market here. And again, same things, up the elevator and then right back down. Again, tremendous gains, tremendous losses, all in very short periods of time. Um, Bitcoin Treasuries. This is MicroStrategy on the right, and BKKT Holdings. That's a kimono maker in Japan that decided they were going to get into the crypto holding, the Bitcoin holding business. Look at that graph. That graph may be identical to the one I started with, and MicroStrategy isn't that far different. Investors thought that because a company held Bitcoin, you should buy that company's value should be worth a lot more than just the Bitcoin they held for some reason.
Yeah.
That
It's
was
like
the narrative.
slapping .com onto the end of the Subway sandwich company store.
Right. Pandemic winners. Remember in 2020, we were all wearing our masks everywhere and we were scared to go anywhere. Every meeting was on Zoom. If you wanted to go to the gym, you went to your daughter's room and rode the Peloton. Uh, Teledoc, there were Roku, all kinds of companies that have these same exact patterns where the world just assumed that 2020 was the new normal, that we were never going to go to gyms, to movies, to social events, and we were going to do everything from our houses. And yeah, I mean, again, the gains are tremendous, the losses are equally tremendous, and the time periods are relatively short. SPACs. No, that was a great idea. Invest in something where they don't even know what they're going to buy, and the thing that they think they're going to buy, they're valuing at the same value as a mature company that's been doing it for years. These were tools and narratives created by people creating SPACs and selling SPACs. Here's two of them, and there were quite a few others that look very similar. So they all have their own narratives, all of these memes. And it's incumbent upon an investor that's in what may be a bubble, what may not be a bubble, to understand the narrative. Is it is it true? Do I believe in the narrative? And even if it's true, does the price change warrant what the narrative is saying? Uh, is there confirming are the markets confirming this in other ways? So here's an issue with the reflation trade, for instance. The economy is going to be booming, reflation, it's going to be a great year. Why do oil prices keep coming down? Why are they trending lower? That's not what should happen in a stronger reflationary economic trade. And you could say the same with gold and silver. If the dollar's really being debased, why are foreigners buying US bonds in US dollars? Why is real estate not going through the roof? You want to own hard assets. Real estate's a great one to own. So look to the other financial markets for evidence as well, but do your own work. And look, maybe silver really is worth, what is it, 90 today or whatever it is, and
Yep.
maybe it's on its way to 200. What I want you to understand is why. Why is that the case? Do the narratives make sense? And does the price justify those narratives? And maybe you come to the conclusion that the narratives are actually weak, that you think the strength behind it is actually greater than the narrative. And then, lastly, understand who's selling the narratives, right? The SPACs were being sold by people creating them. The meme stocks, narratives were created by guys that bought those stocks before the meme came out, profited and got out. Guys like Roaring Kitty. I think there's a Netflix documentary on how much money that guy made. So with gold and silver, are you listening to the coin dealers? Because they're not going to tell you the truth. They're just, if they thought silver was going to 400, why are they selling you silver at 90, right? And or the people writing precious metals newsletters, listen to everyone, bulls, bears, and just try to figure out what those narratives, the value of those narratives are.
Okay. So,
That's
Michael, this might surprise some viewers here, but I agree with you 100%, which is that folks need to do their homework, um, listen to as many different independent voices as they can in this space, um, be very self-reflective of your beliefs, so that, if you are truly in a bubble, you can maybe challenge some of the beliefs that are causing you to be blind to it, otherwise willfully blind to it. Um, so I agree with you on all that stuff. Are silver and gold in the bubble? I don't know. When I look at the historic price action of them, especially silver, I worry because this is the third and most extreme, vertical melt up that we've seen in silver prices in the past 40 years. And the two prior ones ended with, a calamitous collapse, and then silver was dead money for a decade plus, one or several decades thereafter. So, it's very easy just technically to kind of look at it and say, oh, this is the third, mania, and it's going to end just like the first two, right? That being said, there are a lot of structural things going on in the system. So not just the dollar debasement trade. Governments with fiat currencies are making more of them, and they're losing their purchasing power versus real things. Particularly in the silver market, there are shortages going on here. There are parties standing for delivery that never did before at orders of magnitude they'd never done before. They're at such large amounts that it raises the question: are these major commercial buyers? Are these sovereign entities out there that are doing this? So there's certainly things out there that can make the argument, hey, it's different this time, not just for a blind belief, but for things that we're seeing. Now, again, are those sustainable? I don't know. And I think the big question that really nobody knows is what's the true value, right? So there may be a sustained repricing going on for the metals right now. Maybe silver and gold just have been undervalued by the markets until recently, and now they're catching up to their true value, right? The question is, where is that true value, right?
Right.
Is it $40 an ounce for silver? Is it $80 an ounce? Is it $200 an ounce? We don't know, and that's why, regardless of whether it's in a bubble or not, when you see price action this violent that happens, over such a short period of time, that's where I tell people, I kind of echo, Lance and you, which is you want to do your position rebalancing, right? You want to just stick to the basics of wealth creation, right? And I can understand the stacker who says, look, they'll pry my ounces out of my cold dead hands. I don't want to sell them because I think they're going to be worth a lot more in 10 or 20 or 30 years or whatever. And I'm going to be around them to enjoy it, or I'm going to pass them on to my kids and I want them to have it. Fine, don't sell them. There are ways to hedge, right? So that if there is a price correction, if Michael might be, if his thesis is right, which is that this is a bubble, you have some substantial protection against that, right? And if it's not a bubble and it races from 90 or 91, which is, I just checked, it's where it is right now, to 200, you're going to look back and say, that hedge cost me almost nothing on a relative basis, and I slept a lot better at night. So I agree with you that folks need to do that homework. They're going to come up with their own individual conclusions. Some are going to say it's a bubble, some are going to say it's not. I'm just saying, be honest with yourself that you don't know for sure. And so in the midst of this, just use some of the time-honored, best practices to protect yourself from potential downside risk here.
And also be honest, are you a trader or are you a investor? So if you think silver's going to 200 in the year 2036 or 2031, are you going to just hold it, right? If you told me that's what it's going to do, I'll just buy it today and not look at it, not hedge it, not do anything,
Right.
right?
And
And
not
just
lose
take
sleep
that
from the
gain.
gyrations. Yeah.
Right. Or are you a trader? And are you just jumping on a craze without really knowing what it's all about and buying into a narrative without having done much work, but it sounds great. So figure out what you are. The other point you really should make, Adam, too, is that it has recently been deemed that silver is a critical mineral. And Donald Trump has put a lot of emphasis on critical minerals, right? Ukraine has some, Venezuela has some. We're really fighting China on that issue. So the question is, will the administration put up with higher prices of a mineral it deems critical? That's just another factor out there. And then, I think we talked about this a month or so ago or a few weeks ago. You mentioned there were two prior bubbles that looked very similar. Both of those were squashed by the exchanges changing margin rates on futures. So
Right.
there
Which they
is
are
the
in
poss
process of doing right now. Yeah.
they've done it a few times already. The question is, when does President Trump call the exchange and say we need silver back down to $30? Um, it's a threat. I'm not saying it's going to happen, but it's something you should be aware of because given how violent silver was, it's it could correct overnight. You may not even have a chance to trade it. So if you're going to hedge, if you're going to just take some profits, not sell the whole thing, but take profits, think about doing it now because volatility goes both ways. So I'm off my silver horse. We're done.
Okay, yeah, I know. And look, this is an emotional topic for a lot of the people watching this, not unlike how Bitcoin and crypto is for the folks that are invested in Bitcoin. Um, and I'm sure you're going to get a little bit of blowback because to some people it's a religion. And I would say, hey, if you're one of those people, if you treat it like a religion, that's a pretty good sign you've got some blinders on. And you should be actually taking Michael's advice on just doing the math and doing the self-reflection. Um,
And
uh,
Adam,
yeah.
just for the record, I have physical silver and physical gold. All right. And I've held it for 2003, 2005, something like that. And I'm not selling it. It's just there. I probably give it to my kids at some point. So, I just want you to be fully aware of my personal situation
Right.
as well.
You're not anti-precious metals. No, not at all. Yeah.
Right. I just, I'm a student of financial markets and I showed you how a bunch of them played out in the last few years. And I know historically that price often gets well ahead of of fundamental trend. That's a commonplace in the financial markets. I think we're seeing it in AI too. AI technology is incredible, but financial capital is so impatient. It wants to price in tomorrow, today, and it often gets ahead of itself. So, um, just be careful.
Yeah. Uh, two things. One, folks, if you're watching this and you're saying, "Hey, this actually sounds like prudent advice," I don't really know how to think through this stuff on my own, though. Well, then feel free to talk to one of the financial advisors. If you don't already talk to your financial advisor about it. If you don't have one, feel free to talk to one of the ones that Thoughtful Money endorses. Can be Mike, can be Lance, can be any of the folks you see with me on this channel week in and week out. But tap the expertise of a professional who has frameworks for analysis, but also just has experience in taking the emotion out of the decision making. Um, and look, I'm sure we've got people here that are watching that are saying, guys, you don't get it. It's a whole new world. Silver's being repriced. The world's realizing how scarce it is. Everybody's scrambling for what remains. 200 and beyond's coming up really soon. I can't disprove that. And as a person who owns gold and silver, I kind of hope you're right. I'd personally really benefit from it. But the job here of this channel is to help people build wealth over time. And you got to play offense and defense. And again, the thing that kind of worries me the most about what's going on with the precious metals is just how far and how fast they've moved because vertical moves don't last. They just don't. I'm hoping that when it cools off, it goes sideways. That's kind of the best case scenario. But I'm totally open to the fact that it could correct by 50% or more, like the past two vertical moves that these metals made. So I don't know. I'm putting in some of those defensive maneuvers just in case. So, anyways, highly recommend that at a minimum you do the thinking that Michael's talking about. Go read his recent reports on this, or go talk to your professional financial advisor.
And Adam, you brought up something very interesting there when you were kind of talking about a financial advisor. I'm in I'm under 60. I'm upper 50s.
I was going to say we're getting
And
closer every day, but you're still under, yeah.
we are. I still got time. But I would have loved to have been in this situation with you when I was, say, 35 and assess what's going on in silver and had you ask me, some of these questions and ask my views to see how I would have thought about it then versus now. Over the last 20, 25 years, you learn about markets. We've seen a lot of stuff, the financial crisis, the pandemic, the 10 years of zero interest rates and negative rates and seen all crazy stuff. You read more about history and things that have happened in the past, and you just learn more. I don't know if it's wisen up, but you certainly gain more knowledge. So you know, depending on others that do have broader histories of having been through periods of significant volatility, I think is helpful just to get their opinions, their views. Doesn't mean they're going to be right. I'm not telling you I'm going to be right. I don't, just like you, silver could go to 200, it could go to 30. I'm not telling you which one's coming first. But, you know, having that background, I think is very helpful and learning from others that do have the background.
Okay. And I suspect, you tell me, but I suspect you'd probably be a lot more cautionary now in your
Mhm.
later 50s than you were at 35 in terms of just saying, hey, when the market presents you with really good gains, realize at least some of them.
I think the old me would have traded it. This me is just kind of watching, enjoying the spectacle.
Hmm.
The old me would have tried to get long it, get short it, whatever I would have done. Uh, Whereas now I think I'm just mature enough to just watch, right?
Okay. Well, look, my concluding part on this is I don't think my comments are too surprising to folks here because we talk about precious metals on this channel a lot, and I generally am quite pro them. Um, uh, in no way to take anything I'm saying as being anti them. Or let me put it this way: as much as I personally, may like the precious metals and may probably own a greater percentage of my net worth in them as I probably should have right now. Um, what I like even more is the people watching this channel building wealth in a sustainable and as risk managed a way as possible. And so, it would be irresponsible of me to, you know, just sort of cheerlead this thing up until the point at which it either plateaus or reverses. I just want to make sure that everybody who is invested in this is doing so eyes wide open and leveraging the best practices that you guys help tell folks every week. The best practices for wealth building because those are the ones that are going to best serve you over time. You might get lucky. It'd be great if you do. It's better to be lucky than anything else, but you could get unlucky too, and that really sucks.
Right. Bingo.
Yeah. All right. So Michael, we're going to keep it a little bit short today just because we got to, get ready for our flights and everything. Um, just on the three things that you're going to be talking about at the conference, can you just kind of give the punchline for folks? So I think it was bonds, US dollar, and the Fed. Let's talk with bonds. And I guess in your answer too, I want to ask you a question I asked last week, which is you've already kind of nodded to it a few times. Um, there's an increasing number of voices that are saying, GDP growth may surprise to the upside next year. And you've got folks from the administration like Treasury Secretary Bessent or Commerce Secretary Lutnick who are saying, hey, we think 5% is baked in the cake and we can see the potential for 6% GDP growth. Um, what would that do to your outlook for bonds if the economy was actually that strong?
So, you know, there are people saying that, but just go look at the financial markets where people are putting money to work. And if you look at inflation swaps, if you look at inflation expectations, they're not telling you they're concerned about inflation. They've been
Mhm.
coming down. If you look at truflation, which measures, I forgot the number, it's a massive inventory of prices. It's been
It's
coming,
over 1 million data points there. It's a
yeah,
lot. Yeah.
it's very robust, much more robust than CPI, PPI. It's
Yeah.
been coming down. I believe they're at 1.7 something percent.
Mhm.
So,
Although I'm curious, I mean, how correlated is economic growth with inflation? Do you have to
well,
have
that's
inflation to see
right,
economic
and
growth?
that's kind of where I'm getting at. Not necessarily if, you know, it's supply and demand. If supply is keeping up with demand, then it's inflationary just stays the same. It's a function of supply and demand. You know, I said something about be careful listening to coin dealers and newsletter when we were talking about silver. Well, Besant and Lutnick or whoever else you mentioned, they're cheerleaders also,
Oh,
right?
they have to be. Yeah, no, I get
Right,
it.
right. That's their job. They're not going to
Yeah,
tell you they think the economy is going to suck this year. They'll never
yeah.
tell you that, even if we're in a depression.
They will never tell you that. That said, there is something about sticking your neck out and picking a number because you can be wrong and people can point back to you afterwards and say, you were totally way off. We only grew at two and a
Mhm.
half percent. You suck.
Right, right, right. But look, the Atlanta Fed GDP right now is telling us that fourth quarter GDP was 5%. Yet we've seen inflation figures start to turn lower. So the point is, if you want to know where bonds are going to be, you need to know where inflation is going to be.
Hmm.
That's three quarters of the puzzle. The other quarter of the puzzle or so is really just what we've talked about before, the term premium or sentiment.
Right.
So, if I tell you where inflation is, you can create a model and say, well, bond should be here. Well, the real answer is it's there plus or minus something because investors are scared or investors are buying and, whatever the case may be. So, I think inflation, at least given what we know now, is starting to finally break that. We've been kind of stuck, I think, in large part because of the tariffs. They added some goods inflation, nothing killing us, but it just kind of kept inflation steady, just under or at 3%. So I think we're finally starting to see that dam break a little bit, and we just see a slow grind towards the Fed's target
Target.
of
Yeah.
2%.
So you see 2026 as a year of disinflation. That's your default, right?
Yeah, yeah,
Yeah.
potentially slow. If we get into a recession, it speeds up quickly.
Well, yeah,
If
obviously.
if we have kind of 3%-ish growth, it just works its way slowly
Yeah.
down.
Well, and let me ask you this. So how much of that is, like I think if Lance were here, he would say, well, a huge part of that is just math. It's just looking at what's happening in shelter. And because that's 40% of the CPI calculation, and it's a very lagging data set in the calculation itself. So
Mhm.
you know, as the past year's worth of data starts getting into the system, which has all been disinflating, continues, it's just going to pull 40% of the index down just by math next year.
Right,
And then to your
right.
point, as long as oil prices stay where they are, or maybe even go down further, maybe we free up more oil in the world market with Venezuela, or whatever, who knows, right? But if oil stays where it is and goes down, that's also another disinflationary factor in there. So those
And
two things alone are pretty big. Is that the thesis of your deflation or
tariffs too.
disinflation?
Tariffs artificially cause prices to increase. Those prices now are going to be the same in
Right, because it's
theory.
it's a one-time price shock.
Right.
Yeah, yeah,
So you're turning, say this widget went up 10% because of a tariff. That 10% is going to turn into a 0%
right. A year
because the
later, it's
widget
zero. Yeah,
already reflects the price. And so you're comparing it to what it was last month or last year.
yeah.
So I think all that is going to result in just a slow grind
Right.
lower in inflation.
Okay, but an economic slowdown is not a big part of your expectation there. I don't.
No, no. I mean, if we go into recession, yeah, we're going to get to 2% much quicker.
Yeah, but
Uh,
I don't get a sense that's your default projection for 2026 that we're entering
no, at
recession.
least certainly not for the next 6 months. I am concerned that the labor market is stagnating. So we're adding roughly 50,000 jobs a month, but the population of potential employees is about 120, growing 125,000. So we're slipping. We know that sentiment regarding the labor market is pretty poor. People don't feel confident in their current jobs. They don't feel they can get new jobs. We see that in some of the JOLTS data as well, certainly the surveys.
Yeah,
And so one of my concerns is that we just got through the holiday season. People will spend money even if they don't have it to buy gifts. But what's going to happen now in January, February? People are going to get very frugal because their sentiment is poor, or will they just keep spending? And
yeah.
I think come April, May, we'll know a little bit more about the economy.
Well, let me ask you this. So obviously, a big thing by then will be the impact of tax refunds, which the
Right.
administration is saying will be the biggest in history, right? So I guess where I'm going with part of this is, I mean, I've been I've been pessimistic on the economy's prospects for a while. I've been super pessimistic on the jobs market. That said, I am increasingly becoming of the opinion that you kind of discount everything the administration's been doing at your danger. And I'm not saying it's going to be successful, but I'm just saying you turn these cranks, you pull these levers that they've been pulling really hard for the past year and will be into this year. It's going to be stimulative to the economy, right? I mean, if we do have the biggest tax refunds in history, people are going to go out and spend that, right? So you just you can't ignore that. And so I wonder if I'm beginning to think that, especially now that Trump has, started taking actions like, all right, we're going to buy 200 billion in mortgage-backed securities, right? Like, I'm all of a sudden beginning to realize, wow, I think the administration's going to do whatever it thinks it's going to take to just goose the economy as much as it can, make people feel as positive about their economic prospects or job prospects by November, so that the midterms hopefully don't go against the current administration. Will they be successful? I don't know. I can certainly argue against. But I think you ignore all of those actions at your danger here.
Yeah, drop your politics at the door. And we've already seen it in just the first few weeks of this year, some of the things that Trump has been pushing. So I agree with you. We're going to get, I think it's been estimated that on average, the average tax payer will get 1,000 to 2,000 more of a refund than they would have. Um,
Right.
people
And
didn't
they
change
might
their
even
withhold.
get tariff checks on top of that. I mean, it's something that they've talked about. You
Yeah, I
can't
mean,
count on it,
yeah.
but that would be additionally stimulative if they did that as well.
Right, right. I mean, look, the incentive is on Donald Trump to get it's not even the economy, to get consumer sentiment as strong as possible going into the election so that, in his words, he doesn't get impeached
Right.
if the Democrats take over the House. Uh, and if the Democrats take the House, it's going to be very difficult for him to get through a lot of whatever else he wants to get through in his next 2 years.
Right.
So follow this is kind of a theme. Follow the incentives. Who's incented and what can they do about it? And his incentive is to have a strong economy.
Well, and this is why I'm increasingly getting to the mindset, and you don't have to share this, but I think you might, which is just, hey, all those sort of macro concerns about the economy, the jobs market, et cetera, those they're not getting removed necessarily, but the administration may be buying itself additional runway through a lot of this stuff. And so therefore, I'm open to the idea of pushing out the potential deadline of these things.
Absolutely. I agree with you. And I think the economy will be stronger because of these things. Now, whether stronger means it's plus 1% instead of minus 2%, or is it 5% instead of the kind of more natural growth rate of 2%? That's the unknown, but it will be stronger than it otherwise would have been. The question is by how much?
Right. And the political question is it by enough to
And
make a difference in what people are going to choose when they go in to vote?
Well, and what makes this really hard is, like you said, this is all politically driven, so we don't know what's coming. It's hard to guess at what he may do in April, May, or June to boost sentiment or the economy. It's not like kind of more traditional economic forecasting that you can look at where things are heading and correlations and have a better appreciation. This is kind of the Wild West of economic forecasting.
Okay. You know what? I think I took this a little bit away from getting to your answer to my question, which is what's your punchline on bonds? But I'm guessing because you see slow disinflation throughout the year, you're expecting mild appreciation in bonds.
Yeah. Mild appreciation, I guess would be the way to say it. The benefit of lower inflation will help. My concern is that sentiment, right? About a year ago, we were talking and the bond vigilantes had all the power in the world. Their narrative was extremely strong, right? They were telling you the government can't keep spending the way it's spending, that auctions, every time there was a bad treasury auction, it was the end of the world. It was making headlines and everything, anything that had something to do with bonds that was negative had a negative impact on bond prices, right? And we get through the year, inflation kind of stayed the same. It didn't come down. Deficits didn't really get, Doge didn't have much of an effect. Deficits are still pretty bad, but that sentiment has faded. Bond yields fell roughly 0.5% or so. That narrative has faded. So when I'm looking ahead towards this year, it's not just inflation, but will that narrative return? Is there, right? If Trump starts writing checks to the public, is that going to get the bond vigilantes back on their horses and push that term premium up higher? Or might the markets kind of run into trouble and might there be a flight to quality, flight to U.S. Treasuries? Might corporate bond spreads start to widen out a little bit, push money into Treasuries and cause that sentiment to the term premium to shrink or even become a discount that we've seen plenty of times in the past. So those are your kind of two factors that you need to think about. And I generally think, to your point, I think inflation will fall, so that's a benefit. I'm a little more unsure about the term premium, in part because it's the election, and I don't know what Trump's going to throw at the market and how the market will react.
Hmm. All right. Okay, so real quick, US dollar and the Fed, what are your key punchlines on those two?
Primarily, I'll be talking about dollar debasement and kind of going through some of the money supply is rising
All right.
myths. Yeah, the
So
money
you'll do
supply
your
is,
monopoly money exercise and then you'll tell everybody to buy gold and silver. Got it.
yeah, exactly. Trade your monopoly money for silver. Uh, yeah, and then the Fed will talk about Powell's leaving or is he leaving? Some of the ramifications on Kevin Hassett, Kevin Warsh, or
Yeah.
whoever else it may be. Because again, the Fed has put itself in the position of being the liquidity provider to the markets that happened in 2008. So when you think about what ultimately drives markets, and I think you've had what's his name on Howell? Is that his name? Um,
Michael Howell, the liquidity guy?
yeah, yeah, yeah.
Yeah.
And he'll be the first to tell you liquidity is really what drives markets in the short run, right?
Yeah.
And
Just
so,
FYI, he believes we just peaked out in Q4 in this current cycle. Just FYI.
right. And he's looking at global liquidity too.
Yep.
Um, right. And
But heavily
his
influenced by
measures,
what happens in the US, but yes.
by the way, his measures are a lot more elaborate than my measures. So listen to him on liquidity. But the point is, the Fed can create liquidity. They provide liquidity. So if you really understand what the Fed is doing, what they may do, that's vitally important. So that's why I think it matters whether it's Kevin Hassett or Kevin Warsh or someone else. It matters the DOJ investigating Powell. If it affects monetary policy, it affects stocks and bonds and gold and silver and every other asset.
Okay. Um, Let me just ask you this. Look, Trump um, uses chaos and unpredictability to his advantage. That's just how he works, and he's actually very quite transparent about this. He talks about kind of his opening salvo in any negotiation is to open the door to the negotiating room where everybody is, toss in a grenade, close the door, wait for it to go off, and then walk in, right? I mean, he just prefers to have everybody, discombobulated and not sure what he's going to do next, right?
He loves, I was going to say trial balloons, but he loves trial zeppelins.
Yeah, exactly. That are filled with helium that can explode. Um, uh, so, I have learned not to be surprised by Trump doing something that I don't understand why he's doing it. But I really don't understand why they're doing this right now with Powell in the sense that, like, the clock is almost run out. Like, you want the guy out of there, he's going to be out of there in a couple of months, right?
Right.
Like why this sort of higher risk maneuver now. I mean, okay, I could have gotten it a year ago if you decided I want that guy out of there and have somebody in his seat for a year and a half or whatever before, we have a new Fed chair. But right now, in the last seconds of the game, why even bother?
I don't know. I honestly don't know. I don't understand. The charges don't really make sense because the plans to develop the Fed building were done before Powell was there. Um, there's so much waste in the government. If you're going to start prosecuting Powell, there's a lot of other people that need to be prosecuted. So
I
I
mean,
don't
maybe
get
it's just a
that.
signal that whoever's the next Fed chair, they know, look, if I get on the wrong side of the president, he might come after me with a lot, but I don't know.
Do you want to be a Fed chair? I mean, Powell was appointed by Trump. Do
I
you
know it's
want to
the
be a
irony.
Fed chair? I don't know. It doesn't make sense to me. He claims he didn't know. I don't know if I believe that or not, but regardless, it just complicates getting the next nominee into that seat. And then it raises a question of Powell probably would have resigned. So he's still a Fed governor until I believe it's 2028 and a voting member, more importantly, a voting member of the FOMC. So my guess is that had just everything just been allowed to just mature as it should have, he would have resigned in May, and that would have been it. Now there's a chance that out of spite, he stays on till 2028. And, not that I think Powell will vote against, will kind of create interest policy to go against Trump, but I think it does stop Trump from putting in someone more dovish in
Right.
that seat.
Yeah. All right. Well, I don't know. Well, as the dust clears, maybe we'll talk more about it. But that's just one thing I've really been scratching my head on. All right. So we're starting to wrap up here. Trades. What trades, if any, have you and Lance made over the past week?
Nothing. We've sat on our hands all week.
Okay. You just wait and see.
Wait and see. Want to see you this weekend and get your opinions on everything, Adam, and then
Okay,
we'll figure
sure.
out what to do.
All right. Well, look, in wrapping up here, I don't have a rant planned for the day, so I'll get you out in just a couple minutes, folks. I guess the one thing I'll comment on is so I've talked in the past, Michael, with Lance about the fact that I recently got a couple months ago enlisted the services of a concierge doctor, and it's been great. And I've talked about the details on this channel before, so I won't repeat them all again here. But it really is great, and it's not that expensive. I highly recommend anybody who's thinking about this, who's particularly our age, do this. And what my doctor's been having me do is just go down through the list of the things that are statistically most likely to kill a guy my age, right? And fortunately, as we've been going down the list, checking the heart, checking for cancers, checking for other things, we've been getting good results, which is great. Last big thing I have ahead of me is my colonoscopy, and I'm not looking forward to that. It's my first one ever. I'll share the results once that's done.
Enjoy.
That'll be in early Feb. Um, but one of the things I recently had was a full dermatological exam. And the short end is I got flying colors, which was great. Totally ironic because my wife, who has taken phenomenal care of her skin since, birth, basically, she's already had melanomas removed. And the guy who doesn't really think about it at all, doesn't ever basically wear sunscreen and, all that stuff. I'm doing fine. Um, Now there were a couple of precancerous things on my face that they found, and a week or two ago, I let folks know about that because they put the freeze spray on it, and you could see when I was on camera that it looked like I'd gotten a couple scratches or something on my face. Um, Anyways, those healed up right away. It was all great. The reason why I'm mentioning all this is, in addition to the health benefits of doing the dermatological exam and the peace of mind benefits of you know either getting a good bill of health or at least knowing what you got to work on. Um, when she was sort of spraying my face, I said, I've got this mole up here, kind of came on about, I don't know, 2 or 3 years ago. It's just sort of an age spot, I guess. And she said, yeah, I looked at it and I can't remember what kind of a skin thing it was, but she was like, it's benign. Those things you're just gonna, they just hang around forever. I said, well, can you do anything about it? And she said, well, yeah, I can try to, freeze it off here. I can't guarantee it'll go away. Maybe it'll go away and it'll come back, but you want me to try? And I'm like, yeah, absolutely. So she, sprayed it for all of 2 or 3 seconds, right? And it's gone. So, you get this thing that was, kind of low grade, just bugging me, just a visible reminder of my aging, and I didn't love that it was on my face. It's more or less gone at this
I
point.
was
So,
wondering why you look so much better.
yeah, there you go, exactly. But yeah, folks may remember, you go back to old videos, you'll see I had a pretty noticeable spot right there that's now gone. So, anyways, lots of reasons to go get your dermatological exam, folks, whether it's, for your health or for your vanity.
So can I one request from you, Adam?
Yeah.
I've tried to watch the Neil Howe video twice, and I've
Yeah,
watched the first 5 minutes both times, and then I got caught. Something else happened, and I had to put it on pause. When you guys do your hike in the Cascades, can I join you guys?
absolutely. Absolutely. That would be a lot of
Yeah.
fun. Great. And yeah, well, I mean, to be honest, when he said that, I sort of jokingly said, "Oh, we should do it together, and then we should let folks know." But I've had a couple other folks like you raise their hands and say, "Hey, if you guys do that, I'm in." So yeah, absolutely, there'll be a space for you. And folks, if there's enough interest there in the comment section, maybe we'll take this throwaway joke and make it a real thing.
Deal.
All right.
Deal.
I thought you were going to say you tried to watch it twice, but you just got so distracted by that mole on my forehead that you just couldn't pay attention.
That too.
That too.
That's always been irking me. I'm glad you took care of that.
All right, folks. Well, look, if in addition to working on your health, you think the next best thing to do to improve your quality of life is to continue watching Mike and Lance on this channel week after week, please let them know that by hitting the like button and then clicking on the subscribe button below, as well as that little bell icon right next to it. If you would like to get some help from a good professional financial advisor who can help you look at your financial situation and help you come up with a strategy and plan for 2026. If you don't already have a good financial advisor that you're working with, feel free to talk to one of the ones that Thoughtful Money endorses. These are the firms you see with me on this channel week in and week out. Perhaps you'd like to even talk to Mike and Lance themselves at RIA. To do that, just fill out the very short form at thoughtfulmoney.com, and the firms will be in touch with you immediately after you do that. All right, Mike. Well, looking forward to seeing you tomorrow. Thanks so much
Yep,
for doing this on
absolutely.
short notice. And it's always nice to get that Lance guy out of the chair and get you in here. But anyways, thanks again for doing this. And like I said, look forward to joining you for the happy hour tomorrow.
My pleasure. Good seeing you, Adam.
You too, buddy. Everybody else, thanks so much for watching.